You've seen it happen. One minute your portfolio is doing just fine, and the next, it's a sea of red. Headlines are screaming about a market meltdown, and it all seems to trace back to one person in a suit saying a few words. How can a single statement vaporize billions of dollars? One minute things are calm, the next, a tidal wave of selling crashes over everything. It's so fast, you're left wondering, what on earth just happened? This isn't just about numbers on a screen. This is about psychology. It's a tug of war between cold, hard data and raw, unfiltered human emotion. Today, we're unpacking why financial markets are so ridiculously sensitive to what central banks say. We'll explore the hidden psychological triggers behind these mass panics and figure out who or what is really pulling the strings. The answer might just change how you see the economy forever. Section 1. The Puppet Masters. What are central banks anyway? Before we get to the panic, we have to ask, who are these people who can move global markets with a few sentences? We hear the names thrown around: the Fed in the US, the European Central Bank, the Bank of England, but what do they actually do? Think of a central bank as the guardian of a nation's economy. They're a powerful, often unelected group of bankers whose entire job is to keep things stable and growing. They generally have two main goals, often called the dual mandate: keeping prices from spiraling out of control, managing inflation, and making sure as many people as possible have jobs, maximum employment. To pull this off, they have some serious tools. If the economy is a car, the central bank is driving. If things are moving too slowly, they can hit the gas. If the car is overheating, what we call inflation, they can tap the brakes. Their main tool for this is controlling interest rates. When they raise interest rates, it's like applying the brake pedal. Borrowing money gets more expensive for everyone: your mortgage, your car loan, your credit card debt. It all costs more. Businesses pause on taking out big loans, and people cut back on spending. Money gets tighter, the economy cools down, and inflation starts to behave. On the flip side, when they lower rates, they're hitting the gas. Borrowing is cheap, which encourages businesses to expand and people to spend, giving the economy a much-needed boost. This whole thing is a delicate balancing act, and it's why everyone watches their every move, because when they touch those controls, it doesn't just hit Wall Street, it affects all of us. Section 2. The Whisper That Roars. Why their words matter so much. So we know who they are, but why do their words carry so much weight? In finance, information is power, and the most valuable information isn't about what's happening today, it's about what might happen tomorrow. Central bank announcements are the ultimate crystal ball for the future of the economy. Investors and banks don't just listen for the interest rate decision. They hang on every single syllable, hunting for clues about the future. This is what's known as forward guidance, the art of hinting at what's coming next without making a firm promise. Central bankers choose their words with surgical precision because they know the market will put every one of them under a microscope. A single word can completely change the game. Think back to 2021, when Fed Chair Jerome Powell kept describing rising inflation as transitory. That one word signaled that the Fed saw it as a temporary blip, so markets figured interest rate hikes were off the table. Everyone stayed calm, but months later he retired that word, and panic set in. That tiny change in language told markets that the Fed was now serious about inflation, and aggressive rate hikes were almost certainly coming. It's why every press conference feels like a high-stakes poker game. Traders and the algorithms they use are programmed to scan for keywords like uncertainty or growth. They analyze the speaker's tone. Did he sound confident or worried? Did he pause for a split second too long? It's not always the policy that sparks a reaction, but the expectation of a policy. The market isn't just listening, it's over-listening, desperate for any kind of edge. Section 3. The Panic Button. The Psychology of a Sell-Off. This gets us to the real heart of the matter. The market's reaction isn't just about spreadsheets and economic models. It's about raw human psychology. When central bankers talk, they're speaking to the most primitive parts of our brain, the parts that control fear, greed, and the instinct to survive. The chaos that follows a negative statement is driven by cognitive biases baked right into our DNA. First up is loss aversion. Psychologists have shown that the pain of losing is about twice as powerful as the pleasure of gaining. You feel the sting of losing $100 way more than the joy of finding $100. When a central bank hints at trouble, investors don't calmly weigh the pros and cons. They feel that gut punch of a potential loss, and the instant reaction is to sell anything to make the pain stop. Then there's hyperbolic discounting. This is just a fancy way of saying our brain wants a reward right now, not later. When the market is dropping, the logical move might be to wait it out, trusting that things will recover. But our brain is screaming for immediate relief from the anxiety of watching our money disappear. Selling gives us that instant relief, even if it means locking in a loss and missing the rebound. It's the financial version of eating a donut right now instead of sticking to a diet that will make you healthier in the long run. Finally, it comes down to our need for control. We hate uncertainty. Central bank statements usually provide a sense of predictability. But when a governor uses vague language or admits they aren't sure what's next, our illusion of control shatters. That feeling is a direct trigger for panic. The herd starts running, not because they know where to go, but because standing still suddenly feels like the most dangerous thing you can do. Section 4. The echo chamber. How panic spreads in our hyperconnected world. This psychological panic gets put on steroids by technology and media. The second, a central bank statement hits the wires, high-frequency trading algorithms scan the text for those key emotional words and execute millions of trades in microseconds. The machines are already reacting before most people have even finished the first paragraph. That first automated sell-off sends a shockwave through the system. News channels flash red banners, markets plunge on Fed fears. Social media explodes, with panicked investors and clickbait headlines. All of this confirms the fear that human investors are already feeling, and they rush to sell to get ahead of more losses. This creates a vicious feedback loop. The selling pushes prices down, which creates more scary headlines, which fuels even more panic. It's an echo chamber where the market stops reacting to the original statement and starts reacting to the panic itself. The central bank's whisper has been amplified into a deafening roar of fear, and now everyone is just reacting to the noise. If you're getting some value out of this breakdown and want to keep understanding the hidden forces shaping our world, go ahead and hit that like button and subscribe. It helps us keep making deep dives just like this one. So, why do markets freak out when central banks talk? Because it's not just about money. It's a direct line into our collective financial psyche. Their words tap into our deepest fear of loss and our primal need for control in a world that often feels like chaos. The panic we see isn't a battle on a trading floor. It's a battle being fought inside millions of minds at once. A logical, long-term brain versus our emotional, short-term brain. Logic might tell us to stay calm and look at the data, but our emotions, supercharged by algorithms and screaming media headlines, tell us to run with the herd. And in the heat of the moment, emotion almost always wins. So the next time you see the market go wild after a speech, ask yourself, is this a logical reaction to new information? Or is it the herd reacting to a whisper in the wind? And more importantly, which part of the herd do you want to be in?